Hi. If you're like everyone else that's looking to buy a home right now, you have questions. Good time to buy, good time to sell, what's going on with loans, can I get qualified? I have answers. Stay tuned. So, based on all the questions I've received, I've decided to reach out to Jeff, Smart Loan Officer. I did a short interview with Jeff, so please take a minute, listen to it. I promise you're gonna answer all your questions about whether you could buy a house right now, what loans programs are available, and what you need to think about if you want to qualify to buy a home. Stay tuned, listen, learn.
2008 is that in 2008 there was there was problems or there was faults with the actual industry. You know what I mean? The way things were done with the no income verifications and a little bit too much control over appraisals and stuff. So all that stuff, it was a crying shame that we lost a lot of that. But it was a good for the industry because it kept it honest. You know what I mean? So there's a lot of that going on, and then when it all melted down, there was a lot of scrambling. This isn't so bad because there's not a real problem with the system. The problem exists in the secondary markets now. A lot of investors buying loans are just a little fearful now because you got forbearances, you got job losses. So when there's no one buying loans, it's hard to do loans. You know what I mean? So because we do loans and we need to get the money back to do more loans, right? So
Understand?
government has stepped in as in buying. They're buying mortgage-backed securities, but everything right now needs to fit into a box. You know what I mean? As far as loan amounts, credit scores, down payment, can't get too much off the beaten trail. Otherwise, it's here and there. It's hit or miss with different banks. You know what I mean? They're all trying to protect their assets, and what we have is what they call an old-fashioned credit squeeze. When there's not people, there's a credit squeeze, and that means if you're on the outside of that box, you're waiting it out a little bit. So. But yeah,
Yeah.
questions. I'll just answer your questions. I'll just talk all day if I don't. You don't answer me questions.
So number one thing is like what loan programs are actually available right now?
As I said, you could get a government loan, a FHA loan, a VA loan, a USDA loan, a regular conventional loan with down payment, 3%, 5%. All that is existing. What's affected is the jumbo loans, which are the high balance loans. Those are few between because, again, those aren't loans you can sell to the government. The banks have to hold those loans; they're portfolioed. So, and then when there's a liquidity issues, those are the first to go because they just don't.
Yeah.
The banks only have so much money. So jumbo loans are out. The down payment assistance programs, namely the Maryland Mortgage Program, we've suspended that loan. A lot of banks have followed suit. The reason being is that the contracts we have with the state who services these loans, they consider forbearance as a default. And when there's a default, it requires the lender to buy back the loan. And there's no other outlets for that unique loan. So it's a little contractual issue we have with the state. So once that's worked out, those will be back online. So that's a temporary suspension. Other states like Virginia and Rhode Island, we're back online with them, but Maryland Mortgage Program still trying to clarify the contract because no bank really wants to be holding all the loans. So that's offline right now. I just out that our renovation loans are intact, so we can still do a 2 or 3K, and we can still do a Fannie Mae home style loan. So the renovation loans are there. However, the 203K, the rate is not something that's very attractive now because really no one wants them. So they're coming with the 5 points, and I'm not going to really. It's hard to even offer that right now. So
that's hard money.
Product that's hard to find right now. But other than that, just as I said, anything that's in the box is fine. We got a place for it. We got a good rate for it. When you get outside jumbo stuff or down payment assistance or renovation stuff or things like that, then it gets a little choppy, and it's going to be different from bank to bank. You know what I mean? Not all going to be. They're going to have their appetite for certain loans and not others, and they're all going to have what they call overlays. Overlays is where the banks add their own guidelines on top of the regular guidelines, such as 2 months reserves or raising their credit score limits and things like that. So you're going to get a lot. This is a time for overlays where it's going to be different bank to bank. It's going to be time where some products are squeezed out of the market. We stay in the box, we're fine. And you just got to have your head on a swivel now when you're qualified to buy. Just make sure your lender you're still qualified to buy when you're out there looking at a house. And then, you're not guaranteed anything until you're actually locked in the property and locked in your terms. That's pretty much when you're locked in. Until then, things change quickly. Just got to keep your head on a swivel. That's all.
So as far as credit score, you're just seeing like was like a 680 and above, or
Some banks. This goes back to the overlays we're talking about. So first home mortgage has raised their minimum credit score to 640 right now for our loans. We were doing loans before lower than that, but now it's 640. Some things I hear out there, because I know what's going on in other places for sure. I'm not going to give names, but I know some places have lifted their government credit score requirements to 680. Some are requiring 2 months of payment reserves on all products. These go back to the overlays that all banks are applying to their loans. They want good loans now because, as I said, they don't want to originate a loan. The next thing you know, no payments, job loss, whatever. I think that's the fear in the market now. And that's what's spooking the investors. And until that all works out, it's going to be this kind of environment where it's going to be different rules from bank to bank. You know what I mean? On their FHA loans and whatnot. So.
Okay. So if I'm a buyer in this market right now, I need to buy within I need to move in the next 60 days.
Yep.
What should I be thinking about as far as how much I need to down payment, my credit score? Like what kind of loans should I be looking at and what I need to consider?
Well, I think that you're still good with an FHA loan or a VA loan if you're a veteran, or a USD loan. As long as you got a 640 and higher, I think there's a safe place for that loan. Okay. Feel like you're going to want have your own down payment, as much of it as possible, so you can save 3.5% of the price. That at least gets you to a FHA loan. And conventional side, it could be 3%, depending on the income level and whether you're a first-time homebuyer or not. So 3 to 3.5% of the price. If you have that stocked away and you got a 640 and higher score, I feel like there's a loan out there for you. You know, but when you're relying on down payment assistance, that's offline right now. So you can get everything done and get pre-qualified, and we kind of wait that out to see if it comes back online. Or you can take things in your own hands, have your own down payment available, maybe get a gift from a family member, something like that, and then you're in business. So I'd say get it up higher than the 640, have about 3.5% saved at least, and then you're self-reliant. That's what I'm thinking.
Okay, Jeff. Sorry, I got all these, like, all of a sudden I'm receiving tons of emails.
Oh, geez,
Well, Jeff, so basically, if anyone's looking for a loan right now, it's best to just reach out to you.
Yes.
And the same thing I'm telling my clients, let's have one-on-one conversation.
Yes.
It's different for each person.
It is. That's what you're going to find out now. It's going to be different with each person. It's going to be different with each bank. Time to get with the loan officer, figure out what your credit qualifying is, figure out what programs are available. And you could do all that work right now. And then what you have to be aware of is that things are changing fast in the industry. Nothing's guaranteed until it's locked in. Find a property, lock it in. So it's just a matter of going through that process and keeping in touch with the lender to make sure nothing has changed more frequently than you would otherwise. That's all. Yeah.
Awesome. Well, Jeff, thank you as always. It's just tons of knowledge. I appreciate you taking the time to answer these questions. What's the best number for someone to reach you?
Right now, 301-802-1944 is my cell phone. I'll call that my bat line, and you can reach me. And so I'm working mobile now, so the office is little, we're closed that down, but I'm available with a computer and my cell phone anytime. So 301-802-1944, that will reach me. Okay.
All right, Jeff. Well, thank you so much, man. I appreciate it.